Hey everyone, in the last 1 year, gold prices in India have jumped by around 30%, a move that caught everyone's attention. But historically, in the last 25 years, gold has grown in the range of 9 to 10% CAGR rate. So clearly, the recent rise in gold price in last 1 year is an exception. The question is, what is driving this rally? And now that prices are at a record high, is it still wise to invest? Let's decode the global and Indian gold story and what you should do as an investor. Let's first understand what is driving this crazy rally in gold price. So there are four key factors. First is geopolitical uncertainty. Whenever the world is in chaos, gold shines. That's why we call gold a safe haven asset. So from Ukraine war to Middle East instability and even China-Taiwan tension, investors globally are rushing towards assets they believe will retain value in any scenario. And that's gold. Especially after the latest volatility from Trump tariffs, there's an extreme uncertainty in the global market. And that's where people are rushing towards gold. Then second factor is central banks are buying gold like never before. This is the net central bank gold purchase data in last 14 years, where the last 3 years gold purchase is nearly 2 times the average gold buying before that period. And there are two key reasons. First is central banks are trying to reduce their dependence on US dollar. Due to rising US-China tension, Russia sanctions and loss of trust in Western financial system, many countries want to reduce their dependence on US dollar. And gold gives them independent financial strength as it is an internationally accepted asset class. And second reason is portfolio diversification and hedge. Gold helps central bank hedge against currency depreciation, inflation and financial crisis. It acts as an anchor of trust when global market turn volatile. Then third factor is interest rate peak. Central banks, especially US Federal Reserve, have rapidly raised interest between your 2022 to 24 period to combat inflation. However, interest rate in the US have peaked out last year at 5.25 to 5.5% and US Fed has already cut the rates 3 times in 2024, taking the interest rate to around 4.25 to 4.5%. And market is expecting further rate cut in 2025. So when interest rates peak out and the real yield, that is the return after adjusting the inflation, often become unattractive for investors in bonds or fixed income. As a result, investors try to shift their portfolio from government bond or saving account to gold. So that is another reason behind increase in demand for gold. And then fourth factor is stock market volatility. Stock markets have been volatile and investors are seeking safe haven assets. Gold typically performs well when gold market is volatile or in correction phase because it is viewed as safe and non-correlated asset. Now all that explains the surge in international gold prices. But what about gold price in India? So apart from all these above factors, there are a couple of more factors that impact gold prices in India. First is your USD to INR volatility and second is government taxation. Gold is globally priced in dollar but Indian investors buy it in rupee. So Indian gold price is equal to your global gold price in USD multiplied by USD to INR exchange rate plus there are import duties and taxes by Indian government. It means if USD to INR rises, that is rupee weaken and let's say international gold price in USD stays the same, in that case gold become more expensive in rupee term due to currency depreciation, even if the international price do not change. Vice versa, suppose international gold price goes up but INR appreciate, that is rupee becomes stronger, then Indian gold prices may not rise as much as your international price or may even remain flat. Apart from this, there is an import duty on gold which was earlier 15%. But last year, July 24, Indian government reduced this import duty from 15% to 6%. And that resulted in fall in gold price. Also, there is 3% GST on gold. I hope you got a fair idea behind factors that result in increase in gold price internationally as well as in India. Now the million-dollar question is, can gold continue to rise or can there be a correction? So first of all, please note that gold does not follow the valuation metric like PE ratio for stocks. While there has been a strong rally, historically gold's price tend to rise in inflationary environment or times of uncertainty like the one we are seeing now. So until this uncertainty remains, gold may continue to witness good demand and its price may continue to rise. Another concern is inflation in US. So as long as inflation remains a concern, investors might keep flocking to gold as a hedge against the loss of purchasing power. However, in the short term, there could be profit taking or price correction as some investors might pull back after such a large rally. But broadly, the global uncertainty would play a very important role in deciding the gold price. Now, in my opinion, I believe that in the long term, gold would generate a CAGR return of 9-10% on an average. And gold should always be looked as a hedge against inflation and global uncertainty. Hence, it should not become a major chunk of your portfolio. Retail investors have this tendency to run behind asset class that generate highest return in last 6 to 12 months. During 2020 to 24, we witnessed a massive interest in stock market. Especially 2023 to 24 was crazy. Many retail investors tried their luck when market was already expensive. And now when the stock market is underperforming and gold is rising, many people would get tempted to buy gold. But if you are a long-term investor, I would strongly recommend sticking with your asset allocation plan. Don't speculate with gold. It should only be a part of your portfolio for protection and not your entire portfolio. So if you already have 5-10% exposure in gold, you don't need to do much. And if you do not have any exposure in gold, and let's say you want to diversify your portfolio, then you may consider 5-10% allocation. But remember, don't overexpose yourself in gold just because it has jumped 30% in last 1 year. And make sure that you buy gold in a systematic manner in parts. For example, you can consider buying fixed amount of gold every month or quarter regardless of the price. This way, you can average out the cost of buying over time and potentially mitigate the risk of buying at a peak price. But if your goal is to profit from short-term price movement in gold, then I would say be cautious. I was also looking at the view of top brokerage houses on current rally in gold and their expectation. And majority of them have upgraded the gold target due to current ongoing geopolitical instability, especially with Trump tariff. For instance, Goldman Sachs hiked 2025 gold price target to $3,700 per ounce, and currently the international price of gold is around $3,200. So there is still 15% upside as per Goldman estimate. In fact, it predicts that in case of extreme risk due to geopolitical instability, gold price could jump to crazy levels of $4,500. Then Switzerland-based investment bank UBS Group has forecasted a price of $3,500 per ounce for gold in 2025. By the way, this is not the first time when gold prices have jumped so much. During 2008 housing bubble bust, international gold prices zoomed nearly 150% from level of $700 in November 2008 to $1,800 in August 11. However, international gold prices corrected around 40% from August 11 peak till January 16 period. Although the correction in Indian market was not that steep. Indian gold prices fell down around 10% from peak of around 31,000 rupee per 10 gram in 2012 to around 28,600 rupee per 10 gram in 2016. Now there are two key reasons why Indian gold price did not correct like international price. As discussed earlier, first reason is INR to USD depreciation, or in other words, dollar became stronger, dollar became stronger and rupee got weaker. In 2011, 1 USD was equivalent to 46 rupee. In 2016, 1 USD was equivalent to 67 rupee. This rupee weakness significantly softened the impact of falling international gold price in India. Plus, there was also the impact of gold import duty. So my point is, it is not that gold prices always go up. Yes, they are not as volatile as equity, but in the long run, the return from equity are always higher than gold. While gold has certainly outperformed equity in last 1 year, if you look at the bigger picture, equity has always outperformed gold in last 10, 15, 20 and 25 years. Okay, let me not stress this video further. I hope you got a fair idea on why gold prices have jumped so much in last 1 year and what can be the expectation. As mentioned earlier, gold price movement in the near term would totally depend upon the geopolitical factors. If the uncertainty continues, gold may continue to witness high demand and may rise even further in 2025. But if geopolitical risk reduces, gold prices may stabilize or even correct. Now you tell me in the comments, do you hold gold in your portfolio? And what do you think? Will gold price continue to rise or will it fall now? Also in this video, I did not cover the various options of investment in gold. Earlier, one of the best option was SGB, that is sovereign gold bond, but now it has been discontinued by government. So let me know if you want me to do a video on various options of investment in gold in India at this point in time. And if you find this video useful, do share it within your circle. I'll see you next video. Till then, take care.